Mining stocks are often expected to lead the precious metals market. Right now, they appear to be catching up. Gold and silver have already moved sharply higher. Mining stocks have moved too, but not nearly to the same degree. That divergence matters. Because historically, when metals make sustained moves, miners don't just follow. They accelerate. Peter Schiff has been making this point clearly. Mining stocks are performing well, but compared to the magnitude of the move in gold and silver, they are still lagging. In other words, the metals have moved first. The equities are only beginning to respond.
Also, look at what happened with the mining stocks. Because another knock on the gold bull market was the lack of confirmation in the mining stocks, because the mining stocks were lagging. They're supposed to be leading. Mining stocks are supposed to be stronger than the metal in a bull market. But these stocks are now outperforming the metal itself, which means now everything looks like a bull market. You can't say, well, you're not seeing a confirmation in silver, because we are. Oh, we're not seeing it confirmed by the mining stocks. Well, we have. And in fact, one thing about the mining stocks is that even though they've outperformed the metal, they didn't outperform it nearly enough. Given how much gold and silver prices have risen and how great an impact that's going to have on earnings of these mining companies, stocks are still very cheap. And that's still, to me, a positive contrarian indicator in that the investing public still doesn't appreciate how cheap these gold mining stocks are and silver mining stocks are. They still don't get the significance of the bull market. Investors should still be buying not only physical gold and silver at these prices, but especially the mining stocks.
Schiff also points to something else that strengthens the case: energy costs. With oil trading below $60 a barrel, mining margins expand dramatically. Miners don't just benefit from higher gold and silver prices, they benefit from lower input costs at the same time. That combination creates operating leverage. Revenues rise while expenses stay contained.
And you know, the gold mining stocks, not only are they going to make a lot more money because the price of gold is going up, but look at oil prices. Oil prices are below $60 a barrel. They're about $58 a barrel. That is the most significant cost in gold mining is energy, and that's going down. Now, I don't think oil prices are going to stay down, but they're down now. So this is great for the profits of the gold miners.
And this isn't limited to one side of the sector. Gold miners mine silver, silver miners mine gold. As precious metal prices rise, the benefit spreads across the industry.
But also, silver going up is going to have a major impact on gold mining companies, because pretty much all the gold mining companies mine some silver. It's a byproduct of gold. And the way they report it, it's not earnings from silver mining, but the money they get from their silver, they use that to offset the costs of mining the gold.
This isn't a narrow trade. It's a broad one. That's why this move matters. If gold and silver continue higher, mining stocks don't just keep pace. They have room to catch up. And historically, that catch-up phase can be powerful. That's the setup. And it's one worth watching closely.